Welcome back to Liberty and Finance and Reluctant Preppers. We're glad to have this returning guest. Andy Schectman is the CEO of Miles Franklin Precious Metals Investments. Andy, thanks for joining us here again.
Good to be back. Dunagun, nice to see you again.
It's quite common that we have guests maybe once a month or once every 2 months, but people won't let you go for more than a week at a time at this very critical and fast-changing time. They want you got your fingers on the pulse of what's happening on the ground in the precious metals market with your 30 years of experience and with your dad's education that you got from him. So we've got some real life stories that people are letting me know about that I wanted to get your perspective to weigh in on. But before we get to those, could you just take a couple minutes to give us, your view of the landscape that we're facing right now? We've certainly had some recent big name guests on here, like Rob Kirby, who's a proprietary analyst in the precious metals arena, and Rick Rule, CEO of Sprott Asset Management, one of the most well-respected physical investment firms in the precious metals space, on just in the last couple of days. And they've let us know very dramatic and even unprecedented things that are going on with the apparent difficulties of fulfilling physical demand on the Comex market, in Chicago, and also just the state of cleaned outness of the pipeline and the channels, supply chain in precious metals. And I'll bring that home to some personal questions people have asked me in the last few weeks. But what's Andy Schectman's view of what's going on right now in the precious metals market, both domestically, globally?
Concerned, Dunagun, really concerned. I, from an objective viewpoint, am very concerned that about the viability and sustainability of my business in this environment. And I say that to you because you see the frailty of the supply chain in looking around you. You don't have to look very far. The Canadian Mint currently is closed. They're supposed to open up soon, but they're so back-ordered, heaven only knows when they'll start getting back to, if they do anytime soon, to a normal delivery schedule. Yesterday, the United States Mint closed because one of their security guards came down with a virus. About an hour later, they sent an email saying that they plan to open back up tomorrow, because it was just an outdoor security guard who had no access to the production floor. The West Point Mint, the United States Mint is located in West Point, New York. Well, what happens if New York is quarantined, if things continue down this road? Trump was going to do that a few days ago. He backed away from it, but what happens if he decides to do it again? The frailty of this market concerns me. Just like every market that is so reliant upon a supply chain, this market is tremendously reliant on a supply chain, whether it be from a mint that's across the ocean or in New York, or delivering it to a primary distributor, or from the primary distributor to us or to a client. All of it is related to supply chain. And you're beginning to see very quickly how this could break down, and I'm concerned about it. And I guess I'd like to kick this off by simply saying people will hear me talk in ways that I've never spoken before. And I don't want to come across as a pitch man. I'm here to tell you we've done more business in the past 2 months than we do normally in 6 or 7 months, more than we've done in years before. I want to earn people's business, but I also want to be straight up and honest about what I see. And what I see is a very, very, very concerning to me, a depleting supply chain, greatly accentuated interest and demand, and a very, very, very fractured and frightening supply chain that, in my opinion, could break completely and totally very quickly. And as you were saying to me offline, a lot of companies have nothing. And quite frankly, I see how that is because I work with many of the large distributors in the industry who have nothing. We got out in front of this and fortunately have been able to stay fairly flush with product, but I'm not convinced that will hold the course very long unless things somewhat open up to any semblance of normalcy, let alone go back to the way things were a few months ago.
Right. I mean, in general, people are wanting their lives to go back to normal. We all want to get back to the things that we do well and the ability to do our work and get paid and go on trips and travel and see our family and things like that people, and nobody knows when will life go back to normal or what will the new normal be. And I've had the privilege over these last few weeks, which is I'm a new licensed rep with Miles Franklin, and so I've had people talking to me about their personal lives and sharing some of them are in retirement, some of them are disabled, some of them are nearing retirement, some of them are just getting started into their first steps. We've had homeschoolers who want to teach their kids about where real money comes from, and I've just got so excited because we homeschooled our 5 kids, and it was one of our children who actually led me into this rabbit hole of waking up about sound money. So it's just been astonishing to me and very rewarding to hear these people's stories. But one of the questions that they ask me over and over that I wanted your help to make clear, and I think I have a grasp of it just because I have a background in supply chain, so I think I'm getting this. And please keep me real here if I say the wrong thing, straighten me out. But what I'm hearing people say is, how is it that if they look at their local coin shops and there's nothing available much in gold and silver, and they look online at most of the online websites where they've gone in the past to purchase, and they're seeing back order, out of stock, and they're finding things picked clean there, they're saying, how is it that Miles Franklin can still lock in orders? So this is how I've explained it, and see if this makes sense to you, because it does to me. And that is that if you look at the whole supply chain all the way from the beginning to the end, you got mines on the one end where they're digging the ore out of the ground, and you got refiners who are changing that ore into something that can potentially be made into products. That metal then gets sent to the mints. The mints, whether it's a government mint or a private mint, change that raw material, that metal, into finished bars and coins and rounds. And then those typically go to these large nationwide bullion exchanges who are like the wholesalers. And then you've got all the online dealers and all the large shops that will order from there. And so in a normal situation, that whole supply chain is all clicking and it's all filled up with product all the way along the way. So the miners are operating and the refiners are operating and the mints are operating and the bullion exchange they're holding something, and then the local dealers and the shops and the online dealers, they all have got something to sell. So people are accustomed to that. That's normal. For years and years and years now, people have been able to go into their local coin shop or their online dealer and just pick out whatever product they want, compare prices, shop, and buy. But over the last month especially, and starting a little bit before that, depending on how heads up people were getting, people catching wind that things were not so rosy in our financial picture and that sort of thing have been concerned and shifting out of dollars or stocks or things like that and wanting to get their hands on real money. So they've bought up what's available at the local coin shop. They've bought up what's available from the main online dealers who had stock, and then they've bought up what was even farther up this food chain at the bullion exchanges. And now the bullion exchanges for firms like Miles Franklin that have these long-term relationships with them are able to give us heads-up insight into what's on inbound shipments, committed inbound shipments to the bullion exchanges. It's not even there yet, but we can actually lock and commit orders so people can buy from stuff that's on the truck or on the shipment or that's coming to the bullion exchange. So by the time the shipments actually show up at the bullion exchange, they're already spoken for. They're already all locked in. So people are able now with us to lock into that incoming inbound material. But people who are thinking they're not comfortable with ordering something that they don't see sitting on a shelf, and they say, I'll just wait till I see it back on the shelf again or see it back listed as in stock before I purchase again, maybe waiting a lot longer than any of us can predict if the mind share of the population keeps getting more and more aware that, oh my gosh, silver and gold is where I need to be because that's sound money. Then the few is now going to be followed by the many, and the amount of supply is just almost been tapped out in the supply chain. Did I miss anything in there? Was that accurate?
That's pretty accurate. There are a few things in there that I would add. First of all, yes, in general, that is very correct. Whether you're talking the mines, which are now shut down, or the refineries, which are shut down, you also have the main authorized primary distributors, 4 or 5 of them in the United States, that are working on 20, 30 times greater demand than we've seen in the past couple of years out of nowhere. As I mentioned last time we talked, it was like a water fountain to a fire hose jammed down your throat in a matter of days. And so everyone was caught off guard as it pertains to supply. And then as the coronavirus started to accentuate, now everyone's practicing social distancing. So the shipping is a fraction of, in terms of employees packaging boxes at all these locations, a fraction, coupled with far, far greater demand. And, you know, I'll get back to the question in a moment, but just to accentuate your point about waiting, in 2008, everything came back. It was a V-shaped recovery, and everything came back because it was an issue of liquidity. To me, this isn't an issue of liquidity. This is an issue of concern, fear, catching a disease. No one wants to go out and spend the money that's dropped from helicopters. They don't even want to go out and catch it as it's falling from the sky. This is a whole different thing. And so when we talk about supply chain disruptions, we have to ask ourselves, do we see a new normal anytime soon? If we do, then great. Then you do want to wait. You want to wait till the premiums come back in line. But I can't answer that question. And I can tell you that I owe a big debt of gratitude to Chris Martenson and Peak Prosperity. I've been following him for over 60 days, and I got in front of this, and we ordered a tremendous amount of supply. Now, we've been doing this for 30 years. Most of the online companies have been doing this a fraction of that long. We know all the players in the industry intimately. We have great relationships with them. We are one of only 27 companies ever approved by the United States Mint as an authorized reseller. So we are high up on the food chain. And like anything in life, done again, it's about relationships. You don't do wrong by anyone. You pay quickly. You do the things that you're supposed to do in running a business, ethically, morally. All of those things add up over 30 years. And so we are at the top of the line. Furthermore, over 30 years, we have built a heck of a network around the country in coin shops. Hundreds and hundreds and hundreds of them call us first whenever they have product to sell. We pay top dollar. I wire them immediately, and they send us their product. So we have avenues that other people don't, who haven't been at this game long enough. But I will tell you, I'm getting very concerned, because if someone were to call me right now and place a $10 million order, I'm afraid I couldn't probably do it. At least I could hedge the metal position on Comex. I could fill a good portion of it, and then it would come in as it comes in. But you're right. This is a game whereby right now, all of the supply chain, all the way up to what is coming in from the distributors weeks out, is already being sold. So at this point, a lot of what we're selling to people is promised to us. And this is where I get nervous, because we take in someone's money. We pay a large bullion distributor whom I've never had a problem with in 30 years. They always deliver immediately. In fact, if I don't pay within 2 days, they're all over me. Now I'm more concerned about them being able to deliver in a timely fashion because of the supply chain interruptions, not because of their creditworthiness, but because of the ability to ship. And like I said earlier, the United States Mints in West Point, New York, I have stuff on order from them. Well, what happens if New York is quarantined and shut down? Then what? These are all things that no one's ever had to deal with, as is this entire situation. Previous situations in my career, distortions, problems, 2008, 2001, those are all liquidity problems. This is anything but a liquidity problem. You're seeing deflation in value, markets deflating. So yes, liquidity plays into it. But I don't care how much money the Fed gives the public. Will that be enough to jumpstart the economy? Will they open up restaurants and bars and pro sports and all the things that create a cycle, an engine of growth in a Keynesian-based economy? I don't think so. So my biggest concern right now is exactly what you're saying. Supply chain interruptions. We've done a marvelous job of staying on top of it, having product to sell when other people don't. But honestly, between you and me and everyone who's listening, it is my largest concern, how we continue to get product in an environment where nothing is moving. Now, it's still moving. It's gummed up a bit or a lot, but it is moving. What happens if it stops moving? That's the question that people need to ask themselves. And that's a question that I ask myself on a continual basis over the last few weeks. Never asked it once in my career, took it for granted. Now I'm concerned about it, to be honest with you.
You were telling me yesterday about the physical logistics of the packaging, for example, even at the bullion exchange, where now we're selling out of those inbound shipments. When they arrive, that it's taking longer than it normally would to get them shipped out again to the customers. Certainly, we've had a member of the trucking industry on our show before talking about logistical challenges that they're facing in the trucking industry. But you were even seeing that at the packaging of the bullion. Can you describe what you saw?
Well, I mean, look at the U.S. Mint. One employee gets the virus before they even do research. The whole thing is shut down. Then they realize it's a guard outside, never been on the floor, so they can open back up tomorrow after a deep cleaning, 48 hours. But as it pertains to the wholesalers or the big primary distributors, well, these guys have wood tables that are 200 feet long, and every 6 feet is a person packaging boxes all day long with enough packing supplies at each station to pack your whole house up. Well, now they have, instead of having 75 people doing that, they may have 15 to practice social distancing so that there isn't what just happened at the Mint. An employee gets it, and now the whole operation turns pear-shaped. Everything goes upside down. No one gets anything. These distributors that we're talking about, 4 or 5 of them handle all the big online distributors. Now, I have relationships in other parts of this industry that those folks don't have. That's really how I'm able to do what I'm doing. I have relationships that are one step below the 4 or 5 primary distributors that are still very, very powerful in and of themselves. The combination of the primary distributors and these other relationships have allowed us to continue to sell product when others can't. But when you see primary distributors start to take a great deal of time in shipping and receiving and be out of product, that's something I've never seen before. Well, I guess I could say we saw it briefly in 2008. But now I'm more concerned about how do they get back online. In 2008, the Fed made that happen. I don't think the Fed can make this happen this time. And I am concerned, Dunagun. I'm very concerned that this gumming up of the gears will get worse before it gets better. I'm not saying that ultimately things don't, pop back into some sort of semblance of normalcy, but my biggest concern right now is that this gumming up of the system gets worse. And as we were talking about earlier, the allocation to precious metals in a portfolio in 1980 was 8%. Today it's 0.5%. If we see a regression to the mean over those 40 years, of time, you're looking at a 2.5% allocation. If so, in other words, if people who are afraid of what's happening in the stock market right now pull their money out and put just 2.5% into precious metals, that's a 5-fold increase in demand when right now just the choir is blowing the roof off the building. What happens when Joe Sixpack and Mike Middle America starts to buy gold and silver? I will tell you this unequivocally. In this environment, within 24 hours, every single company, mine included, will be out of product. And that's not sensationalism. That's reality. When I see this happening from just the people who are aware of what's going on, although that is expanding a bit right now, if you see an allocation to 2.5%, which is, again, only half of what it was in 1980, which ironically was the last time the Dow Jones and the gold price crossed each other at 800, 1-to-1, you can see why there would have been a big allocation to gold back then. But we see just a little bit regression to the mean, there'll be nothing left. And supply will be a very, very big problem in that environment.
That's the other question. I was going to share a couple other stories that people have told me. When other people say, well, they've been thinking about this for a long time. I mean, I guess I really named my show Reluctant Preppers for a good reason, because some of the people I've been talking with, I've been watching this, I've been thinking about this, I've been watching your guests for years now, and I guess maybe it's time for me to start, because now I see the stock market going down, and it's like, so they said, well, I guess I'll start doing some small initial purchases, and I'll start doing some sort of regular tranches. And in general, that's a wonderful strategy. I mean, wonderful life habit to get into is acquiring real, lasting, valuable things. That's great. But in the environment that I'm seeing and new to, so I'm the guy with the new eyes here, and you're the guy who's got the experience, but we're both seeing it from a couple different vantage points. And I'm seeing every day on our list of things that we have to offer, certain things getting sold out or whatever. It's like, okay, I mean, all I can say is if you think that there's going to be less demand next week, that's not what I'm seeing. So just to be aware as people try to plan what moves they want to make, is that these are not ordinary times. So they want to take that into account when they're making their decision.
100%. And this is not about being a pitch man or trying to push people into anything. We'd like to earn their business. But, think bottled water and toilet paper when you think precious metals right now. Honestly, that's what it is. And I know you can vouch for that. It's far greater demand from a very small segment of the population and not enough supply. So what happens when it becomes evident to everybody that they need an allocation to metals? It's the same thing that happened to Costco. When everyone realized they needed to rush out, after people who've been listening to your show and Chris Martenson for the past several months were already perfectly supplied. And reluctant preppers is a great name. It's hard to prepare. Preppers have been given kind of a bad image with the TV shows and just the name prepper or doom and gloom. No, it's not. It's being smart and taking care of your family and doing the things that you should be doing and realizing that, just like every up has a down and good has a bad, prosperous times have times like we're running into right now. And preparation is very, very important. I think that cost averaging, as you mentioned, is a very good way to accumulate things. It's the only way to truly smooth out the uncertainty curve. Unfortunately, the luxury of that may have already come and gone, at least in the short term right now.
Yeah, one other question that people said to me is, if only I had a month and a half ago or 2 months ago taken my money out of my stocks in my IRA and put them into cash so I could do things better now, because now I feel so bad because I'm down 20%, 25%, 30% from where they were. Well, we're seeing now in the past week here what many of the, Gregor Mannarino and others that we've had on here are interpreting as a Fed-driven rebound here. Some call it some hope that it's the beginning of a V-shaped recovery. Others are saying, "Are you kidding?" With the state that the economy has been in for the past several years and degrading, that this is the last attempt of trying to stimulate by flat out purchases from the Fed to try to put a quick bottom under what was otherwise a collapsing market. And anyway, it just occurred to me as I was thinking about it last night is maybe this is a gift. This moment is a gift. Those who were wishing that they had gotten out before the bottom just fell out. We shouldn't take this for granted. This moment that we're in right now.
I'm concerned about that too, because typically when you see Fed-induced liquidity, and this is what's happened since 2008. All this liquidity has gone into asset price inflation. All the big money has put their money into stocks, bonds, and real estate, driven all these prices way up, made a lot of money. What's concerning me is the Fed has flat out admitted they're going to buy the stocks, just like the Bank of Japan does. Mm-hmm. And if you look real closely, at least to me, here's what I see. I see Fed coming in, buying S&P and Dow futures. The price goes up. The market goes up. The next day, Dow futures are way down. And what does that tell me? That tells me that the people who have made all this money over the past 12 years are smart enough to know they sell on any semblance of strength. The insiders are getting out as the Fed is propping up. And what that tells me is now you go from asset price inflation to real price inflation in a compromised supply chain model, which is really awful, because now you have all this money chasing what little goods are out there. And if you see big money start to put their money into the precious metals market, it'll just absolutely disappear totally. But the bottom line is this. Yes, I do believe that you're seeing insiders selling on strength because of this tremendous volatility. The Fed props it up, the insiders get out. And, profit's not a four-letter word, and those people realize it. And so I think that for your listeners who are reticent about doing that, yeah, if you're given this gift and it is popping back up, it goes to show what hyperdeflation can do. And that's what we're seeing really in this model where the whole engine of growth just stopped. You're seeing hyper-deflating markets. A market that falls by 40% in 2 to 3 weeks is hyper-deflating. The Fed is very frightened by that, so they're propping it back up. But to see those sawtooth up and downs as the Fed props it up, that's insider selling. What are they going to do with their money? Maybe they're buying gold. I don't know. Whatever they're doing with it, it will translate into price inflation as the money comes out of the asset prices.
The other thing you just brought up there really got my wheels turning, because you said this damaged supply chain, and you're not just talking, I don't think you're just talking about the precious metal supply chain. You're talking about the global supply chain for everything, the toilet paper, the water, the food.
Everything.
So, folks, if you've been putting off the idea that you're going to set aside some supplies of things you need for daily living until a time when, I don't know, when you're sure you're going to need them, I hope it's not too late. But for those of us who don't think that we can predict that the supply chain is going to be any healthier 3 months or more from now than it is right now, if you can find something that you're going to need to keep your family healthy, this would be, a really opportune time to take that on and acquire real things that your family's going to need.
Look, Dunagun, aside from all this money coming out of financial assets, which is very inflationary as it comes into real price inflation or as it pertains to price inflation, you have a Fed and a Treasury who have proven that they're going to do whatever they can to stave off deflation by printing and printing and printing and printing and giving free money to everybody. This is Weimar Republic Germany. This is hyperinflation. And anyone who doesn't see that is being naive in the respect that all of this money that is being given to small businesses and to unemployment, to other central banks to buy assets, to our central bank through the repo market or through the purchasing of treasuries, or I'll go on and on and on. The entitlements that we are paying, the amount of money that we are creating and giving away, most of which will never be paid back, is destroying the value of the currency right in front of us. So one of the most painful things would be a hyperstagflation, where you have little or no economic growth and escalating prices. And that's what I see happening, especially in a compromised supply chain, as the big money gets out of the market and is looking for somewhere to put it. Are they going to put it in negative yielding bonds, or are they going to buy tangibles? I don't know. I don't know what they're going to buy, but this is a period of time and an environment where people should take it seriously and realize that, we've all grown up and lived under nothing but prosperity, where it's been our birthright to live better than our parents and better than their parents. Maybe these times are going to change, at least for a while, and we have to be prepared, reluctantly or not, or we'll find out the hard way what not being prepared really is.
Those of you who haven't checked out Gregor Manarino's post from today on his traderschoice.net and on Twitter, check it out. It's called The New Dark Ages. He says he's not trying to be sensationalist. He's just saying we could be heading into, if it's going to be greater than the Great Depression, in fact, even major bank economists have been announcing in the last week or so, which is interesting, because the first few days of the drop about a month ago of the stock market, they were all saying, hey, this is normal, everybody just stay calm, everything looks good. And now they're saying, yeah, maybe it's going to be worse than the Great Depression. Well, if it's going to be worse than the Great Depression, we may be looking at some hard times that none of us want to anticipate, but it would be prudent for anyone to make preparations if they haven't already. I wanted to ask you about a story that I've heard you tell in the past, because people who are talking to me and calling me about precious metals in the past few weeks have been asking me this question when they're faced with the choices that it comes right down to it, and they're weighing different things that they could potentially acquire. They're saying, well, tell me the difference between, for example, U.S. Gold Eagles versus Gold Buffaloes, or just some private mint bars, or tell me the difference between Canadian Maple Leafs versus Gold Maples versus just other private mint or rounds or that sort of thing. And one of the things that I do tell them is what I heard you tell a story about, is the different treatment by customs when you're trying to travel across borders carrying mint coins. Can you explain that to us and what you experienced and how it kind of drove that lesson home to you in a very personal way?
Sure. So I've been telling people for a very long time that physical gold, if it is a legal tender coin with a face value, is that face value as you're crossing the border. Now, caveat to that, I wouldn't try this in South or Central America or Mexico. I would want to know where I'm going. Now, if I'm going to Canada, or I'm going to Europe, or I'm going to Australia, that's okay. Or coming back into the U.S., trying it somewhere where the customs are not as agreeable or very different than the West, I wouldn't try this. But I'll tell you a story that I had in Canada, in Montreal. that shaped my thinking about this. So I'd been telling people this for a very long time, that this is indeed true. I had experienced it once before in Vancouver, but wanted to take it to a different level in Montreal. So we have a Brinks facility in Montreal. We have three, Brinks, Montreal, Toronto, and Vancouver, and we go and take part in audits, a couple audits each year in those facilities. We have a very large client who owns a pharmaceutical manufacturing company in Montreal, and when I go up there to do an audit, we like to have lunch together and talk. And on this one particular occasion, he said, "I'll drive you to the airport on your way home, so take a cab to my factory. After your audit, I'll bring you to the airport." Great. So I get there, and we go out to lunch, and we go back to his office, and we have our normal discussion. And at the end, he says to me, "I have an associate of mine, actually is a good friend. We have offices, as you know, in the United States. We're going to transfer him to the United States. He wants to talk with you about something. Do you mind if he comes and talks to you?" I said, "Of course not." So the guy comes into his office wheeling a suitcase with 240 gold maple leafs in it. And he says, "Andy, I'm going to be spending an unknown amount of time in the United States. I know you have some vaults in the U.S. I'd like you to take these 240 gold maple leafs with me and deposit them into one of your vaulting systems in the U.S. I understand you have one in North Dakota." I said, "Yeah, I do." And the gentleman who owns this company is one of Miles Franklin's largest clients. And so I acquiesced. I have the global entry card that means I've met with Homeland Security. I've been vetted, never had a felony. So they give you a card that lets you buzz right through customs. So you still have to fill out the customs form. And
declaration.
On the
Yeah.
Correct. And it says, "Do you have more than $10,000? Now, I had 240 gold maple leafs. They're a $50 face value coin. That's $12,000.
It says right on there, $50.
$50. Okay. Correct. That's $12,000. So I did declare that I had more than $10,000. And for your listeners who have ever come out of an airport in Canada into the United States, you'll know, or they will know, that you go through U.S. Homeland Security, Immigration, Customs in the airport. So the gentleman whom I'm speaking to, who's asking me what do I have to declare, was wearing United States Homeland Security badge on his shoulder. And I said, "I have 240 gold maple leafs." Now, this was 2 years ago. I said, "I have 240 gold maple leafs. I'm declaring $12,000. They're $50 face value coins." And his eyes kind of spun around, and he said, "Well, that's far beyond my pay grade. You'll need to go to further screening." So he shut off the light of his booth, paraded me down a 45-degree hallway into the bowels of the Montreal airport, where they would not hear me scream, I promise, in a room the size of a small auditorium that was 100% stainless steel and mirrors. I'm all alone in this room because he says, "Sit down, don't touch your bag, someone will be with you shortly," and he's gone. I'm in there for 45 minutes with no contact whatsoever and looking around and looking at the mirrors. I know they're watching me, waiting for me to reach in and throw things down the leg of my pants. Gentleman comes out, and he's wearing United States Homeland Security supervisor. And he sits at his podium for a few minutes before he asks me to come up, and he does one of these. This is he and I in the room, doesn't even make eye contact.
Oh, my gosh.
He's trying to make intimidating situation. It was Academy Award worthy. Now, I'd been through this a year earlier in Vancouver, so I was somewhat prepared, but not really prepared for what was about to happen. So I said to him, he says to me, "Mr. Schectman, what do you have?" And I said, "Like I told your associate, I have 241-ounce gold maple leafs. I'm declaring $12,000. These are $50 face value coins. See?" I give it to him. He looks at it and he says, "You know, Andy, I'm inclined to believe you." He says, "But let me ask you a few questions first." He says, "How much is gold today?" At the time, it was $1,200. And I said, "It's $1,200. He says, "Well, isn't that about $300,000? I said, "Yes, sir, it is." I said, "But here's the deal. It wouldn't be the smartest thing that you ever did, but you could take that coin out to the concourse at the Tim Hortons in the middle of the airport, buy a donut and a coffee, and by law, they'd have to take it. Now, they'd be lucky. You would have just done something not too wise, but it's law. It's legal tender. It is $50 Canadian money." He says, "You know, I am inclined to believe you." He says, "I need to go do a little research. I'm going to borrow your coin. In the meantime, you fill out this FinCEN form. Now, this form is something I've never seen subsequently and never had seen previous, and it's something I would never want to see again. The form, the acronym is something to the extent of Financial Investment Network Criminal Investigation Division, something like that. You don't want to be on this form. And the questions that they ask are incredibly invasive and frightening. At this point, I'm like, geez, Louise, this isn't my stuff. My Social Security number is going on it. I'm going to get a call from an IRS official, or they're going to be at my house when I get home. I'm thinking this is bad. So anyways, I fill it out. I have no choice at this point. And he comes back a few minutes later and he says, I'll be damned. He says, you're right. It's legal tender. Here's your coin back. And he says, let me see the FinCEN form. And I hand it to him. He says, wait, I almost forgot. He says, how much money do you have in your wallet? And I'm thinking, oh boy, here we go. I open up my wallet. I say $37. He says, do you have any other money you want to tell me about? I said, no. He says, are you sure? I said, sir, I may have some change in the bottom of my backpack, but that's it. He says, okay, you're free to go. And he tears up the FinCEN form. And I said to him, this is wonderful. I'm not here to look a gift horse in the mouth, but why are you letting me leave without declaration after spending an hour here in
your
customs?
steel box? Yeah.
Yeah, right. And he says, figured you'd ask that question. He says, you're entering the United States with $37 in your wallet and some change in your backpack, to the best of your knowledge. That is correct. I said, yes, sir, that is. He says, you're also entering the United States with $12,000 in gold, legal tender currency. Is that correct? Yes, sir, that is correct. He says, well, the exchange rate to the U.S. dollar on the Canadian dollar today puts that at $9,400. You're free to go. So he let me leave with nearly $300,000 worth of gold non-declared into the United States. So to answer your question as it pertains to that, the main difference when we talk about international travel, as your question asks, is just that. Had someone had gold bars or Krugerrands, which have no face value, and try not to declare it, they would be confiscated on the spot and probably be arrested. You'd have to declare it. And again, declaration isn't the worst thing in the world, mind you. Declaration is simply declaring it. And if you have the means to own it, you're okay. If you have never showed more than $5,000 on your W-2, well, you may have some explaining to do, but walking across the border with $300,000 in gold. But if you own a precious metals company and declare it, or own it yourself legally and can prove that, it's not a big deal. But if you want to be able to go across borders, and in particular, this happens a lot with our Canadian storage accounts, where people go and they take out their gold and go back home and don't declare it, because legally it is legal tender. As long as you have under 500 ounces, as long as you have under $10,000 US. Now, had I gone across with $12,000 face value in American Eagles, 240 American Eagles, I would have been over the $10,000 threshold. I would have to report it because the conversion rate came into play in this case. But the bottom line is, for some people, those that would live up near the border, this could be very, very significant. And being able to go across the border unencumbered, and for people who travel a lot between here and Europe, that may be an important trait to them. The bottom line is simply this, that the legal tender coins, to me, always are a better choice than the generic alternatives. It's kind of like Coca-Cola and generic Kirkland brand Costco soda. If you had a bucket of each at a party and the Coca-Cola were gone, if your guests were thirsty enough, they'd reach for the Kirkland soda without a second thought. Same thing here. In a bucket of American Eagles versus a bucket of 1 ounce generic bars, I can promise you the Gold Eagles will be gone first. But in the end, the soda drinks just fine and the 1 ounce bars sell just fine. It's just a question of what is preferred. Government-issued coins have a far greater demand in this industry, and that's just one of the little perks that you can get as it pertains to travel for any of your listeners who do travel frequently between here in Canada or here in Europe or here in Australia.
Well, that was just a sampling. I mean, that was a harrowing experience, but jeepers. It's a sampling of some of the questions that I've been asked over the past week by just the most sincere folks, and one of the things that I've just tried to answer whenever people have asked these questions is just try to explain this is what we know about what's the trade-offs are between there's also some specific rules around like IRA eligible metals, for example. Not as restrictive as I might have thought, but you do have to stay on the right side of that, and I've been able to help guide a few people in that regard as well for precious metals IRA purposes. So anyway, the thing that surprises everybody is how easy it is to pay for these. It's flexible. They can just mail a personal check. They can wire funds from the bank or whatever, and that there's modest to no shipping charges has been quite impressive to people. And so anyway, I already had one repeat customer just in the few weeks that I've been doing that. So anyway, just wanted to give you one more chance. If there's anything that we haven't touched on that you think is important for people to be considering, one thing that we glossed over way back in the beginning was my reference to both Rob Kirby and Rick Rule mentioning the Comex and their difficulties satisfying physical demand. So we've been talking about kind of at the retail level here for individual investors, but it sounds like the big ticket funds and so on and are also having a challenge getting physical. What do you hear that you can maybe share with us about what's going on in that arena before we let you go?
Sure. So I tried to place a $3 million order last week for gold eagles and buffaloes, and it was right as New York closed. It was 4:30, 4:45 Central Time here in Minneapolis. And in speaking with the large distributors, I was told that after I'd already come to an agreement with this person, that the spot price that I saw on our website, on Kitco, on any of the major Western websites here that produce the gold spot price was off by $40. And that's the way that what? How am I going to go back to this client who just purchased or wants to purchase 1,750 coins and tell them they're $40 more expensive? And the spot price he sees with his own eyes is actually off by $40. You can't do that. And basically what you're seeing is the beginning of the end, maybe, for the Comex market. The Comex market doesn't have enough gold to satisfy those people standing for delivery. So they are going to London and getting gold from them, and the price is more. The price that is being quoted on Comex is not realistic when it comes to actually getting the real product in London, and which sets up a real dangerous precedent right now in the respect that what they had to do right now is change the rules. I wrote down the numbers. There were 26,000 contracts that stood for delivery. That's 2.6 million ounces of gold. A normal month is 8 to 10,000, not 26,000. 3 times as many contracts wanted delivery. And when they saw what the Comex had to go through, I think you could see a good deal of the next delivery month may not be till June, but you will see people stand for delivery, I think, knowing that the Comex is scurrying to get metal. And in fact, so much so that the London Metal Exchange deals in 400-ounce gold bars. The right. Comex deals at 100. The Comex changed the rules midstream here so as to not to go into default by selling fractional interests of a London good delivery bar. I still haven't quite figured out how they plan on doing that. Are they going to cut them in fourths? Are they going to melt them down and refabricate them? I'm not sure. But people have always talked about the Comex being a fraud, the rehypothecation of assets. And I don't know the exact number of rehypothecated gold bars, but suffice it to say it's in the many hundreds. So what that basically means is if, let's say, it's rehypothecated 400 to 1, that means that for every 400 people that stand for delivery, 399 will get cash settlement. And I heard Rick Rule on your podcast yesterday say he believes that's what will happen, that it will go to a cash settled arena. If more and more, this is what the Hunt brothers did in 1980. The Hunt brothers saw that there were far more paper contracts than there were 1,000-ounce bars of silver in the warehouses and stood for delivery. Well, the Comex changed the rules on them at that point, saying you could be unlimited short, but only a certain level, like 1.5 million contracts long. So they were forced to liquidate many of the contracts that they had in order to be in compliance. And I think the same thing will happen here. They're already showing they're changing the rules as it pertains to delivery by buying from London 400-ounce bars and giving a fractional interest, not the 100-ounce bars that the contract says that they own. But the fracturing of the Western price and the London price is very, very frightening. And I think it is the beginning of potentially cracks in the Comex facade. And you see enough people stand for delivery, the Comex will force majeure, they'll cash settle, and very quickly the Comex will be exposed and perhaps could even lose its price-setting mechanism. When we look at a place like the Shanghai Gold Exchange, which has delivered between 80 and 90 times more gold than the Comex has in the last 2 years, that's a more accurate reflection. That should be a price-setting mechanism. The Comex is the tail wagging the dog. The Comex was originally set up for producers and farmers and legitimate producers to hedge their risk and their production, not the other way around, not for a bunch of banksters to speculate and to create a perception of reality through manipulating the prices. And what that has done it has set this stage for where we are right now, which is potentially a Comex market that is exposed for not having enough metal, for rehypothecating the certificates in an environment where no one ever stands for delivery. And I say no one, let's just say a very small portion of those contracts ever go to delivery. I think the emperor has kind of exposed himself that perhaps he's not wearing clothing, and very quickly I could see the traders jump on board this and demand delivery and very quickly try to force the Comex's hand, which by summer, by June, you could see some real interesting times with the Comex market and people who have held gold. Remember, I keep going back to this. Gold was reclassified as the only other Tier 1 asset on the planet last April, almost a year ago to the day. That's significant. The big money doesn't do something like that after 80 years of having just the dollar and treasuries as the only Tier 1 asset in the world if it doesn't play into the long part of their planning. The breaking up and fracturing of the price setting mechanism, that's just another sign that things are starting to move at a faster clip. And then all the retail product disappearing, the refiners shutting down, the mines going out of business. This is setting up for a perfect storm. And I guess it'll be very, very interesting summer in many levels as it pertains to what happens to us all socially, what happens to our economy that is massively deflating, with the Fed trying to massively inflate, and the Comex that is being exposed for being fraudulent, for not having enough gold to back the number of contracts that they sell that everyone had to demand delivery for that will very quickly be force majeured and cash settled. So could this happen? Heck yeah. And I've never been more convinced of it by what we're seeing. When you call to place an order that I could have done at the snap of my finger anytime over the past 30 years, now I can't even do it because there is no product, and I'm being told that the spot price on Kitco is $40 off once New York closes. That's not good. And that's the beginning of something very troubling if this trend continues, Dunagun.
Yeah, and we'll have to circle back later on some other implications because Doug Casey has recently written articles about the primary, secondary, and tertiary effects of the COVID pandemic. He said the primary is the direct medical impact on everybody that is actually affected by this, and our hearts go out to everybody. I've got a family member who's a nurse. We've got people who, a son who just got back from an overseas mission trip. So everybody is affected by that in some way directly. Then there's a secondary effect, which is the economic effect, which is this freezing up of the world economy. And we had Alistair McLeod on talking about, Europe is shutting down, USA and UK are next, and so on. That huge pit that's being formed right at the peak of the credit cycle and the unwinding of all the excesses in the equity markets and so on. How big of a black hole that's going to create financially in all of our lives for how many years to come. Yep.
Yes, all at the same time,
yeah, right.
Which exacerbates it tremendously.
And then
so there is an engine of growth right now.
Yeah, right, and productivity gone. And then you got the tertiary effect, which is the political response to decrease of liberties and intrusion and limitations on people's freedom of movement and constitutional rights and everything else. And he said, we may solve the medical problem within whatever months or years, whatever, but the financial thing may last a decade or more, maybe the biggest depression that we've ever seen. But don't expect them to roll back any of these encroachments on our liberties and overreaches of political power. So there's serious times ahead, and that's what we're trying to be here for, is to help people be aware and prepared. You're a big part of that, Andy. Thank you for joining us. We've been speaking with Andy Schectman, the CEO of Miles Franklin Precious Metals. Andy, as always, thanks for joining our viewers here on Liberty and Finance and Reluctant Preppers.
And again, thanks for having me. Thanks for being part of the team. And I'm very, very happy to be here and hope to be back with you real soon.
If you've decided that now is the right time for you to protect your family's financial future by acquiring physical precious metals, gold and silver, I'm delighted to let you know that I have now become a licensed dealer's representative for Miles Franklin, one of the oldest and most trusted names in bullion dealerships. And we can provide you with physical delivery to your personal possession or to professional vault storage or precious metals IRAs. Just email me at libertyandfinance@protonmail.com, and please include your name and phone number in your email to libertyandfinance@protonmail.com. We'll get right back with you and find out how to best meet your needs so that you can either begin or increase your acquisition of physical precious metals now and protect your family's future starting today.